Good afternoon, everybody. This is Dennis Wilborn from the Active Trend Traders. And normally at this time I would be introducing David Grandy from All About Trends, but Dave has taken his wife and they've taken off for, I think, Tennessee or something for a wedding and a second honeymoon or something. And standing in for Dave and doing going to do an absolutely fantastic job is his partner and the founder of All About Trends, which is Harlan Payan. Harlan, how are you doing today?
Hey, I'm doing fine. No complaints. Yeah. Happy to be here.
Yeah, so exciting stuff in the market this week, eh?
Extremely. It was an extremely huge week. So, you know, when things get really, really, really good, I start to get really cautious.
Yeah, without a doubt. And
you just have to. A little bit of caution is a good thing. Because it keeps, it's like what I say. It's okay to have your head in the clouds just as long as your feet are firmly planted.
Yeah, right on. And I know I've seen some of the trades you guys have done this week. I know you've seen some of ours. I know that you have done a wonderful job of protecting the profits, just like some of the positions you have on. So I want to remind everybody the way we kind of work this is I have the question board. So if you want us to review some stocks at the end, you can just put in a stock. Like I would prefer, like no more than 2 stocks per person. Be courteous to the folks who all the people who have signed on board, and then also questions. And when Harlan is doing his part of the presentation, I will be quickly banging away on the keyboard, sending you guys out answers to your questions, and then I will also check the transcript when the session's over with. So let's get going. I want to remind everybody that everything we present here is for training purposes only. We make no recommendations. We basically, we will highlight and show where the clues are converging, and we will provide you with what setups we're going with. But if you're learning a new system, please paper trade it first prior to risking your own personal capital. Here's my mouse. Okay. I want to quickly remind everybody, where were we at last week? I think this is kind of a good exercise that we've been doing here lately, is when we talked last week, as you can see, I did not take drawing lessons since the last time we met. The S&P and the Dow were in pullback. The NASDAQ was an okay pullback. The Russell we deemed was in a good pullback. And we're anticipating a potential bounce this week. When we came in at the last Friday, the issues in Iraq were kind of bubbling and boiling over, and that has not impacted the market that much this week. As we get ready, as we finish off this week, one of several things are of note. One, the S&P, the ascent has slowed. It's extended away from all the moving averages. And several of the indicators that we use are divergent in a bearish way. And when I say the ascent has slowed, Harlan's going to be showing you guys a chart in a little bit on I think the S&P, and it'll explain why how fast the stocks have been going up, why it has slowed. The NASDAQ itself is at resistance. It's extended with divergent indicators. The Russell is approaching resistance, a resistance zone, and it's extended with, is there a theme going on here? When you start ticking off the clues, slowing, extended, we've got 3 clues almost on every index going into this weekend that says, we may, regardless of outside influence, be at a position at these levels where at these levels, the outside influences won't matter. That it won't take much of an outside catalyst for profit taking to take place. And so let's take a look at the charts, which of course is kind of my favorite part. See if I have another. We'll come back to that. That's how we did this week. A real quick, or through the month. It's always fun to try to find the button you're looking for. On the left is a daily chart of the S&P. On the right is a weekly chart of the S&P. The S&P has been operating for quite some time inside this trend channel, coming close to bouncing off the bottom, getting off the bottom, and moving back up towards the trend channel. But I noticed something as I was doing my assessment this afternoon. We kind of now have a series of highs that are within the original channel, and so it looks like we are really coming close to hitting that uptrending resistance, which may foretell of at least either a move sideways or perhaps a move back this way. The hanging man candle on the S&P yesterday did not resolve, and it is voided, so we don't have to worry about that one anymore. However, we're getting very small body candle, and so it would not be a surprise to see us pull back either to the 8 or even to the 20 in this case, because look how far extended we are from the yellow line, which on my charts is the 50-day. Some of the divergence I was talking about on the stochastics, and also you can see that we have the stochastics making not quite as high of high as in the price action is moving higher. Doesn't mean it can't go high. It doesn't mean that it can't continue to go higher, but it does kind of indicate that things are slowing. Let's go over here to the composite really quick. This is the one. Sure looks like it's set up. The Nasdaq sure looks like it's set up for a double top to me, simply because you've got this level over here at 43.71, and we hit it yesterday with a hanging man, and this hanging man is still a valid bearish signal. Does it mean it's going to reverse and just fall out of the sky? Not necessarily, but it is indicating that buying interest has been drying up on the Nasdaq over the last couple of days. The other thing I want to just call to everybody's attention with the Nasdaq, the S&P, and the Russell, we've had three nice moves. We've had one move here, one move here, and one move here. And if you'll notice, and just notice this clue, is each one of these little thrusts, it didn't go quite as far. So it's telling us that, yeah, we're still moving up to highs. However, the momentum may be waning here as the market gets tired as it moves up. Let's take a look at the Russell real quick. Waiting for data. There we go. So the Russell, let me extend this trend line here. As you can see with the Russell, it has continued to move higher. Again, you can see those three legs up. Excuse the train that's going by. See, I have Wi-Fi under the train trestle down in the creek behind our house, and so I'm out there actually by the creek doing this presentation, and I'm just kidding. No, in the small town we live in, everybody's close to the train. Anyway, we've got three prongs up. This one is slowed down. However, the thrust by the Russell was stronger than the Nasdaq, and also a little bit stronger than the S&P as the Russell stocks got involved with this latest rally. They were slow to the party, or late to the party, but they've made up for it over the last few days. It too is starting to get into a resistance area formed both by the upward tendering channel line, and also we have a line over here that could come into play at about 1190 is where a more significant resistance zone begins. So any questions? It would not surprise me that we could see either some resting here or even a little bit of a pullback to the 8-day or maybe even a little bit below it, and then either a bounce further up or a bounce up. If it fails to get back through this high, then it could be one clue that we're starting the summer doldrums. and we might get a little bit more of a sell-off. But we'll have to wait and see regarding that. So don't see any questions. Harlan, it is almost your turn. I want to flash over here basically to trades we did this week, or trades cumulative for the through the third week in June. Thus far, we have taken profit on $3,000 worth of income trades that have been closed, and capital growth trades closed for another $1,000. Thus far, profit per month is about $4,100. We basically use $100,000 and size all our positions off of $100,000 trading capital. And this is our performance for this week. Cash income generating trades, 1,700, and the only position that was closed was WUBA on a conserving profit exit today. And then the latest trades we have entered are BIB and ALXN, and those were triggered both today and yesterday. And then as you can see, our trigger from 6.4 on the TNA, we're up 16%. We had an earlier trigger at the beginning of this week for a second portion of TNA, and so I'm really happy about that, Harlan. And
well, if you can't be happy about that, you can't have an expectation, did you?
So I am switching.
Too lofty.
That's right. I'm switching over to you.
Alrighty.
You are the presenter.
All right. Well, bear with me. It's my first time doing this, so if I screw it up, you'll know why. Let me get to a. How's that?
Try one more time. There you go. And then just there you go.
All right. All right. Does that look like it should?
Yes, it does.
Awesome. All righty. The other thing is, like Dennis has trains, well, we just happen to have the U.S. Navy Blue Angels in town. So if it gets really loud over here, that's just because you have a squadron of F-18 Hornets flying overhead. So that out of the way, much like Dennis said, we had a nice, orderly, healthy pullback. We love markets like that. We don't get scared when markets pull back. Because for us, it allows us to pick off issues at lower risk alternative entry points versus having to chase a bus. Because of that, we have pulled in like $6,000 worth of gains. We do this using anywhere from 5 to 7% of our portfolio in any one position. It's a risk management tool that we use where we don't want to get too stacked in any one position and make up too much. That works for us. We still have a few current positions. We did sell out of a lot of issues this week. Actually yesterday on strength. We like selling on strength. A couple of issues, as you'll see, Tesla, GLOG, VPI, things of that caliber. So that all being said, yeah, I have to definitely concur with Dennis that it was a great week. We received this from one of our subscribers, and it just goes to show you, I thought it was an outstanding email that we received from them, testimonial, whatever you want to call it. Just wanted to let you know, with your help, David's help, my IRA rollover is now only down $8,000. Back at the end of April, I was down over $40,000. So,
hey, Harlan,
just in a matter of weeks, that's a huge situation.
Hey, Harlan.
Yeah.
Harlan. Yeah, I'm sorry to interrupt, but am I doing the math correct that since April, in reality, this person is up 32,000?
Looks to be, yeah.
Wow. Okay, cool.
That anyway you slice it, that's a huge coming back out of a correction and emerging out of a correction. If that doesn't take someone's self-confidence and really build it up, knowing that when you go through bad times that you can get through it, I don't know what is. So hats off to her. So let's bring us right back to the only three things that we base everything we do on. We try to keep it simple. Uptrends, how to trade them. Downtrends, how to trade those too, because if you're an opportunist, there's opportunities on the short side too, should that be an area that you want to delve into. And then, of course, change in trends. If you're long at a market top, you got to know when to get out of the way. If you're short at a market bottom, you got to know when to get out of the way. So that basically is the backbone and the structure of what everything we do starts right here. So let's talk about pullback off highs. Ingrain it in your head, we do talk about this all the time. The absolute strongest pattern that we see in the marketplace is issues that are in confirmed uptrends, trending higher, that are above the 50-day moving average, and then there comes a point in time where they stage an orderly pullback to support, a moving average, a key Fibonacci retracement level, things of that caliber. That's what we live for. That's what we look for. And then it's just a matter of picking them off. VIPs. Let's talk about VIPs. When we first started looking at VIPs, you can clearly see it started out March, went into a correction. It was a nice correction because it was more of a sideways, albeit it was pretty jagged, wide and loose. But there came a point in time where it crossed over the top blue line, and then you'll see those little pink lines. Those are what we call the pullback off highs. In this case, it's a pullback off highs trend channel. So we like seeing that develop, and obviously much like the old adage, bigger the base, bigger the break, bigger the pullback off highs pattern, there too, the bigger the break. So that is what we were looking at before we picked up some of our VIPs. And as you move on, you're going to see that the pink line ultimately built itself out there in May and June. And when it did have periods of weakness, all it did is come back and touch that 160 level. And as we saw that, you could see the stock was coiling up. It was tight. It was orderly. So we bought that stock on the crossover. Actually, we bought it around 170, and then it kind of waffled for us for a week or two after we bought it, and then it just rocketed right up, and it busted into a new high. So, and as you can see, that red line is your breakout of a traditional, I guess you could say, cup and handle breakout. But look at where our entries were relative to waiting for it to break out. This is why we like those, and those are what we call right-sided cup crossovers. Now let's take a look at it today. This is why we sold this issue yesterday. You can see if you use the traditional entry point, you bought that thing, let's just call it 180 for simplicity's sake. Sure, felt good for a day or two, but then it came back into the base, didn't really, no real major cause of concern. Then it came right back up, retested its highs. That's a change in trend pattern, commonly referred to as a double top. You can also see that at the top, there was some negative divergence in the relative strength up there, meaning that it just wasn't as strong as the prior peak. So that was another clue that we used to say, you know what, 170 to 187 is good enough for us. And had we not did that, we'd have a whopping 4 points of gain versus like a 16, 17-point gain on this. Just as importantly, if you bought the breakout, here you are sitting, you're down 7 to 10 points on it. So it just builds another case for we'd rather use stocks that are pulling back off highs or emerging versus waiting for the confirmed breakout. So it's just a little thing that we like to do. Let's take a look at Tesla. Tesla is another one. You can clearly see, when we were watching this thing, just like VIPS, it was really tightening up there at the end of May, early June. It actually came in, put a little double bottom in there at the blue line. We saw that We saw it tightening up. We saw it was ready to break the big downtrend line to the upside. That's where we picked it off. And sure enough, we all know what Tesla did over the last few days. And there it is. It just rocketed. Sometimes we like to have exposure within the pattern when we see it winding up, because when that one broke out of 205-ish, I'll call it, it was in don't blink form, and it was up 10, 15 points in a matter of minutes. So it's really, you have to literally chase it at the moment in time it breaks out. And usually when you get a fast market, you kind of get a bad fill on your trade when you pick it up. So sometimes we do that. Why did we do that ahead of waiting for the breakout? Well, the market was in a nice confirmed uptrend, actually still is, but you know, given that the overall backdrop was, okay, you know, we're in a good market climate, we're willing to take that risk. And that's what it comes down to with every single trade that you take. If you're not willing to take the risk, don't take the trade. So let's take a look at something that is setting up. Grubhub. You can see it's a newer issue. One could say it's got a completed cup, and this is a handle. This is a stock that it is obviously setting up. There's two trades here. You can buy the blue line at support, hanging around the 33 zone, assuming that support gets defended and it stabilizes. That's your first clue. If you want to take a trade there, that's great. If it doesn't and it breaks down, well, guess what? There's a next level of support at $30 a share. So it really isn't that bad. The other trade is just wait for the break. Wait for the break over that pink pullback off highs line, and that's your confirmed upside crossover. So keep in mind on the bottom I have this thing called an ATR, that's your average true range. Kind of shows you this stock moves 1.9 points per day, and on a $30 stock, that's like 6%, 5.7% of fluctuation risk. That means on any given day, this stock can fluctuate 5.7%. So if you place an 8% stop on something like this, you're very, very close to just its average daily gyrations. So you might want to give it a little bit more room than normal from that perspective. But that one, you know, it's setting up. It's just a matter of when and if is it going to go. So we've talked a little bit about right side cup crossovers. We love this pattern. Dennis loves this pattern. It's all about alternative entry points, much like the VIPS, and one could even say the Tesla trade. This is a name that we're watching. We had it on our watch list for, I think, about a week. And here's what it looked like when we picked off this name. You could see it was building a change in trend pattern as a head and shoulders bottom. In this case, from down to up. So we saw the right shoulder building. There was also a pullback off highs that was building. And at that case, all we did is we just waited for it to cross over in this case, and we took a shot at it. And we did a probing position of a few hundred shares. In the event it would run to the 50-day moving average, stall, sit there, digest some of that gain before breaking higher. So that being said, we bought some at, I think it's $24.69. You never own enough of the good ones, and you always own too much of the bad ones. So here's what that stock did this week. I didn't include today's action, which I think it took it to like 30.72 or something. As you can see, the traditional entry point was it broke out of a cup without a handle, I guess is what they say it was. But look at how fast this thing went straight up. So where's support? If you really look at where's a good quality support level that if the market were to get into trouble, where could this issue come down to and still have its uptrend intact? For us, it's, you know, the 50-day moving average. And where would that put us based on our entry point if that were to occur? It would keep us still in the stock, and we'd be looking to add to it. Versus if the market were to get into trouble, anyone who's buying up in these new highs is buying a stock that's already around 20, 25%. We don't like to buy stocks that in what, 1, 2, 3, 4, in 5 days, put on 25%. That's to us is just not good risk management. It's also what we call chasing a bus. So we did sell half of our position yesterday up in this range of 29.70 something. We still hold the other half of the position. That way, if it does roll over up here, guess what? At least we sold some out at a higher price, and we can always decide what to do with the rest of it. If it keeps going, we still have some. So call it a happy medium. But you can clearly see that your low risk entry point was, the crossover, the green line, the crossover, the pink pullback off highs line, and even the upside crossover, the 50-day moving average. Right now, you're late. You're very late to the party. So it's already ran a lot. So what if it puts in a pullback off highs in here and it just kind of, drifts down just like that right shoulder of your Head and Shoulders bottom there. If it does that, great. That's what you want to see if you're looking to buy this stock right in here. But after a 25% run, if it needs to catch its breath, if it does catch its breath, that's definitely what you want to see. So don't take it off your radar. So moving on, here's a name, little bit bigger picture. The GLOG was very short term over a period of a month or two. And this could be a big monster Head and Shoulders bottom building. Too soon to tell. Doesn't matter anyway. We see a support zone right around 73-ish. We also have that pink pullback off highs line. So as long as this one keeps trending down and hasn't stalled out and shown some stabilization before it decides to launch, we're just going to sit back and keep watching it. So that's why you want your watch lists, so that you're prepared in advance versus having to chase a bus after the fact or read about it after the fact. Here's another example of one that we picked off, and actually it's a really good example of, well, what happens if these right side of cup crossovers fail on you? Well, we bought this issue as it crossed over the pink line to the upside, worked for a day or two, and then you can see it sold off, and it started to sell off to support levels marked in blue. When it did that, when it broke the $90 support level, that's when we decided to walk out and get away from it. So, so even if you use these right side of cup crossovers, if they fail, much like everything, you need to know when to get in. You also need to know when to get out, which is what we say is you need to know what to watch out for. There it is. So we stuck to our guns, stuck to our discipline, and actually one could say it was a successful trade for us because we honored our discipline. So I think there we are. Right now, I'm going to concur with what Dennis says. Maybe later in the question and answer period, we'll get into some individual charts and take things a little bit deeper if you wish. Right now, we're just going to sit down, take advantage alongside patterns that are setting up, and as they trigger, we'll take it on a stock-by-stock basis. We'd like to try to do that in tandem with the markets. And then it's just a matter of managing the overall trend of the stock after that. So there you have it. Now, any questions, feel free to contact us. Customer service at allabouttrends.net. David's phone number is up there, but I don't think you're going to be able to get a hold of him today or this week. So just drop us a line at customer service. We do offer a free 15-day trial if that's something you want to take advantage of to get a feel for who we are, what we do, how we do it, albeit 15 days isn't a whole market cycle, but at least you get a good look at the inside of what we're all about. And if it works for you, great. If it doesn't, well, that's fine too. Now, we do have a combo special. Somebody talked about this a few weeks ago, and Dennis and David and I, we all got together and we said, you know what, this is a great idea. So there you have it. Dennis, if you've got anything to add to this, feel free.
Okay, I sure will. Harlan, thank you so much for covering all those your picks and what happened and all that kind of stuff. It was, it's just amazing. It's when you practice a system, and you're watching a system and things start to basically happen, and you're going, wow, this really works. Because one of the big things that I always talk about is oftentimes people are so focused, traders are so focused on a strategy. I know a lot of people who trade options and don't do it very well. And it's because they don't have a system. They haven't focused enough on the system. Let the system drive your strategies. I'm going to come back to this combo thing in a couple of seconds. I want to cover a couple of the charts, Harlan, if that's okay. And then we'll come back to the combo, and then we'll answer some questions, okay?
Sounds good to me.
Excellent. I'm going to make me the presenter. And we do have some stocks to talk about. I just want to share with everybody. You ever have one of those moments when you just go totally blank? I kind of just had one of those. I don't know what does that. Anyway, okay, I've got it back. We already had a position in TNA that basically got the subscribers in down here. This is one of our premium part of the services. We have a lot of people who like to trade TNA. And somebody's going to have to write me an email and tell me why my daughter-in-law always laughs when I say that. We like to trade TNA, but we'll let somebody else, send me an email and say, why is that funny? Anyway, we also had an alert. So what we do is we split our trades into two things. One, income generating, secondly, capital growth. And when it reached up here at the 76 level up in here, we said, we will take profit because that is a great target area, and it's up back into a resistance area. What we like to do is basically focus on get a little bit of profit off the table as an income generating trade. If you don't need to do income generating trade, that's fine. You can stay in it for the more capital growth stuff, capital growth trades where you let the trade grow, breathe a little bit. But what I've seen with so many traders, and I know, Harlan, you probably also have, is when they first get started in trading or any level of trading, we can tend to, especially if we're not operating off of a really sound system, tend to get a nice profit, and then we watch those profits melt away. And so I like to encourage folks to get in a habit of taking a little bit of profit off the table. And then when you take the profit off the table, it makes it sometimes easier or less worrisome to sit through the pullbacks as the gains are digested. Then we issued another alert on basically Friday or Monday of this week to go ahead and get in based on this hammer. We got into TNA for another couple hundred positions, and again, as soon as we basically broke out above the 78, we took handful of profit off the table. All the time we're building underneath that capital growth. Thank you, Richard. All the time we're growing that those additional shares of TNA are continuing to gain as the capital growth portion. So we were there with that. And then two alerts we sent out yesterday. One was on BIB. There's be a lot of people. There we go. BIB. Basically, the alert was coming off of this little channel that we had going. Not channel, excuse me. The little flag that we had going in here. It broke through this. We took the trade here at about 310. Today it topped off close to 320. 320 is our target to start taking off income generating, and we'll hang with the other half of the position. And on this one, I did 100 shares, so 50 shares would come off at the income generating target, and the rest would be allowed to breathe and move further. And then this morning, I'll take a look at that, Richard, on DDD. And then this morning, we had a great signal. Actually, the signal set up yesterday as we were watching again, you guys call these pullback off highs, right, Harlan?
Yes, we do.
Okay, and I just call it a bull flag, but we get a wonderful spinning top, a hammer bouncing off the 50-day moving average, and as Harlan mentioned, the spring was coiling and getting tighter, and we get a nice run this morning back up to the 20-day moving average. Our profit target for the income generating trade on this one is somewhere between 165 or 170 is what we have our profit stop in for currently. So those are a couple of the trades that have been put in place. I find it very interesting whenever we work together, Harlan, is that while our systems are different, and I evaluate one set of variables, you evaluate another set of variables, oftentimes we come together with the absolute same conclusion on a lot of these stocks.
Yeah, I have noticed that quite a bit lately, and that's good because the more, for us being chartists and technicians, the more reasons that we see or more indicators that we use all saying the same thing, or even philosophies or theologies or styles, when they all start becoming in alignment, that's saying a lot. So yeah. You have in other words, the more bullet points you've got, the better.
Oh, I agree, and it's just, I always find it, like I said, it's exceptional, and because I love the way you guys get to your conclusion. And the other thing I've noticed, and maybe it's just the market conditions that we're in, but I don't think it is. I know that you guys only trade, and I only trade, and I only make observations on the top quality, growth stocks that meet IBD criteria, and that are past the IBD test, if you will, for great
right.
growth stocks. And then you probably do some kind of magic where you hone that list down to a few that you're looking at. I also do to split my list into a couple lists of somewhere between 5 and 10 stocks each. And so I have a very focused private watch list that I share with our subscribers. So, and
well, we kind of say it pretty much a similar way. Only the best and forget the rest.
Yeah, I love it.
It's all about the pattern. It's all about the patterns. That's where all of my initial scans all start out. If you can't see the pattern and if you have to squint to see it, it's just not there.
Yeah.
So, that's why we always say only the best and forget the rest. We like the tightest patterns, and Tesla is great, VIPS is great, ALXN, BIIB, that was a great setup too. So they're out there. Just got to look for them.
So, and as we're kind of wrapping down to, we're going to do some chart review and answer the rest of some questions. I just want to thank everybody. June, we've been in our pre-launch state for our premium service, but the premium service has basically already begun for active trend trading. We are still working some things up on the content for the website, and then of course Dennis is learning how to use the program that sends out all the emails, so thank you for being patient in some of the emails that didn't have proper links this week. Our midweek market sanity check, which is a training webinar we do every Wednesday evening at 6:30, and we post the recording. We're covering this week the second, and I think you'd find this interesting, Harlan, is we're covering strategic exits to protect profits. Sound like a good topic for this time of the year?
Well, exactly. And it's a perfect timing. It really is. So,
and David made me promise to talk a little bit about the all about trends and active trend trading combo special. What we did, as Harlan highlighted earlier, we've got we just came together, and yes, we're not going to become one company together, but we said, we want to show our appreciation for those folks who tune in on these the market stock talks, and so Harlan already flashed what the value was. Is his premiums, their premium service, and my premium service is $49.99 a piece. But we said in order to basically show our appreciation to you all, we will offer that at $149.99 for both services. And Harlan, I'm going to switch back to your screen. Do you still have that where to contact people up on your screen?
Actually, I think I closed it up.
Okay.
But, yeah, customer service at allabouttrends.
Yep.
.net.
Yeah, and
it'll get you where you need to be. My apologies.
Yeah, or you can go to marketstocktalk.com, or if you watch some of my other tech tip videos that I put out on a regular basis, if you just look here on the lower right-hand corner, if you want to take advantage of the combo subscription, you can just click right here on the lower right-hand corner of the banner on my YouTube channel called Market Tech Talk, and it will take you immediately to that combo special. And like I said, I just appreciate everyone who's taken advantage of this, and I'm continuing to be excited. This is going to be we're having a lot of fun, and the last comment on the show for today with regarding this is that it's so awesome that 6 weeks ago, when the market was just falling out of the sky, we were all saying, hey, take the week off, go fishing, go surfing, go play golf, come back in a week. And sure enough, that was a really good suggestion. But then as things started to cook back up, we've hit the mark on the anticipation or expectations for the market week after week after week, and we've been doing this for now 3 months together. So with that, Harlan, thank you for standing in. Now, you did more than stand in for Dave. Dave's got really big shoes to fill now when he comes back.
We'll see. He'll rise to the challenge. You know
Okay.
He will. He always does.
So I'm going to pop off of the so I want to thank everybody for showing up. Please don't hang up because we're going to review stocks here shortly. But I'll just sign off for the recording saying trade wisely, trade profitably. Thanks from